Welcome back to Portfolio, everyone. Apple is the first ever US company to reach a market cap of $2 trillion, which is absolutely insane to think about. This company has been on an insane surge over the past 12 months, and I believe this is a company that will continue to grow long into the future. So in this video, we're going to talk about this new landmark for Apple. We're going to go over a couple other news headlines surrounding the company, go over some analyst expectations of their future growth, and just do an overall analysis of the company to see if now is a good time to buy. So Apple, of course, is one of the most dominant brands in the world, and today their shares crossed the $467 mark on intraday trading, which led them to have a market cap of around $2 trillion, which is absolutely insane. So they are the first US company to reach this mark, and their overall valuation has doubled in only 2 years, which is crazy to even think about. If we take a look at the stock chart, the shares are up 123% on the 12-month chart, which is absolutely incredible. Shares 12 months ago were being traded around $210, all the way up to $462 a share at market close. So Apple has been growing at a fast rate. It was the first US company to reach the $1 trillion market cap back in 2018. And of course, it is the first US company to reach that $2 trillion market cap as well. So this company has seen rapid growth. They are dominating their market, and they have seen massive share price appreciation. This chart just shows that Apple, starting from 2010, so 10 years ago, has returned a total of 764%. Over that same time span, the S&P 500 has returned 183%. So Apple is a company that's completely outperformed the overall market. They have surged and they continue to grow at an insanely fast rate. So this company has been dominating their respective market. So we're actually going to go over some future growth potential for this company and what are some things that will actually drive this company forward because iPhone sales are slowly decreasing each year. Another reason Apple's in the news, and this headline may be a little bit negative, is that they're out and actually fighting with the creators of Fortnite, Epic Games, and a couple other large companies. So originally how this started was that Apple takes a 30% commission from any in-game purchases from their apps that are on people's phones, and Fortnite tried to create a way so they didn't have to pay that 30% commission. They wanted to create this new payment method that kind of took Apple out of the picture, and the Apple didn't collect that 30%. Of course, now there's lawsuits going back and forth between each company, and this is a lot of hot water because Apple has actually removed Fortnite from the App Store, and same with Google Play Store. Google has removed it from there as well. So it's going to be very interesting to see what happens between these two companies, and of course, this may create some little negative news for Apple if anything does come out of this. So there's another big headline around the company, but of course, the most important headline was that we did see them reach that $2 trillion mark. Now we're going to go over some what analysts are expecting for the company and where their kind of growth is going to be moving forward. Analysts who are bullish on the stock, who are very optimistic about Apple's performance, see that by 2023, they will see Apple crossing the $3 trillion valuation. So they actually believe Apple will be the first company to hit that $3 trillion mark, and they believe that will happen within a matter of 3 years, which is even crazy to think about. Of course, it took them only 2 years to go from $1 trillion market cap up to 2, but it'd be very interesting to see if they can do that once again, grow the company value by over $1 trillion to reach that $3 trillion mark within a matter of 3 years. And what's going to help them drive that growth and kind of lead to that revenue and earnings growth year over year, which usually helps bump up share prices, is their variety of products, and their main two businesses that have really grown and helped, overall grow the company are their services and wearables. So Apple iPhone growth is still growing, but it's actually slowing down. And of course, each and every year, or every other year, Apple does release a new iPhone, which there is still a ton of demand for. But overall, there's a lot of consumers who, are good with having their older model and they're lasting longer. So Apple's two other businesses, their services and their wearables, have seen insane growth. In the June quarter, Apple's services rose 15% to $13.6 billion. And of course, this is the Apple Store, iCloud, Apple Pay, Apple Music, and a variety other of those subscription-based services you get from Apple. And of course, they actually launched a major international expansion of their services, and they're boosting that into more countries around the world. And Apple's wearables, so the Apple Watch and the AirPods, have seen growth of 17% to $6.45 billion in the last quarter. So this is another type of aspect for the company that still has not reached their fullest potential. iPhones, I'm sure there's still a lot of growth in them moving forward. That growth may be slowing down, but I still think there's more consumers who can get their first iPhone or will continue to buy the new iPhone when it comes out. but this great aspect for their business is their wearables and their services. The more streaming services and those types of monthly fee service-based subscriptions they can get growing to consumers, I really believe will help the company long term, especially with their wearables. They provide great premium services to consumers and their products are very well made. So it'll be great to see how those wearables continue to grow each and every year. So although iPhone, their main product, has been slowly growing, the other aspect of Apple's business has been picking up speed and bringing up the overall company as a whole. If we take a look at the share price, of course, we saw that massive share price appreciation on the 12 months. Little longer term perspective, you can see they're up close to 300% with share price over the past 5 years. The company did close below the $2 trillion value today as of market close, but overall they did reach that $2 trillion mark in intraday trading. Of course, because they reached that all-time high at the top of the 52-week range, trading right at that all-time high right now. This is a dividend stock. They do pay out a slight dividend of 0.71%. This dividend is extremely safe with a payout ratio of only 25%. Very unlikely that they cut that dividend anytime soon. And they've been growing it at a very nice consistent rate at around just over 10% over the past 5 years with an 8-year dividend growth streak. They have the highest dividend safety rating possible at 99. This company has very safe dividend, almost impossible that they cut it anytime soon. They have an immense amount of cash on their balance sheet, such strong fundamentals, they can sustain paying out that dividend and growing their business year over year. If we take a look at their total return over the past 5 years, we'll see how they beat the market. So without dividend reinvestment, they returned 321% compared to the overall market's 76%. Once we include dividends, you can see here Apple had a total return of 356%, beating their overall industry and grossly outperforming the overall market over the past 5 years. Moving on to what future analysts are expecting, there is actually not a lot of optimism for the share price over the next 12 months. Although the new iPhone will be coming out, analysts don't really see a lot of price potential with regard to shares. The first analyst report took into account 37 different analysts who gave their next 12-month price target for Apple. And the average analyst has a current price target 12 months from now at $445 a share, which actually represents a 4% downside from where it is today. So even though they're expecting a 4% downside, the analysts overall recommend a buy. They asked 41 analysts, 27 buys, 3 outperforms, 12 holds, 1 underperform, and only 3 sells. So overall, still a buy recommendation from these analysts, even though the average expectation for the company is actually a 4% share price decline over the next 12 months. If we take a look at another set of analysts, these are different analysts offering different opinions. And again, another moderate buy, 22 buys, 7 holds, 2 sells. And their average price target for Apple in 12 months is at $434, which represents a 6% downside from their current share price. So all these analyst expectations actually show Apple decreasing in share price over the next 12 months. This is a company with some of the strongest financial statements in the world. They're almost unmatched with regard to their cash balance. And this is a company that has seen massive growth. Their shares have been growing rapidly, and they just crossed the $2 trillion valuation mark. Yet analysts are still expecting a decline in share price over the next 12 months, which is absolutely incredible. So if you are bullish on Apple, if you believe this company will continue to grow long term, buying anytime now or into the future, if these analysts are correct, which of course most of them aren't, but if they are, you can really buy at any point because they're both recommending buy. These large pools of analysts, both are overall having a buy rating on Apple, and they actually expect a price decline slightly over the next 12 months. So if you can buy in at any point, and if you plan to hold the long term, I believe this is a company that will only continue to grow over the next 5, 10 plus years. But over the next 12 months, you might find a nice buying opportunity if these analysts are correct and they can actually predict the price movements of a company. Taking a look at their financial statements, Apple's total revenues are on a nice upward trend year over year, which is great to see. In the past 12 months, they have brought in over $273 billion of revenue, which is absolutely incredible. Taking a look at their net income, 12 months over the past year, they've brought in $58 billion of net income, which is absolutely incredible. Overall, it's come somewhat flat with regard to how net income is performing. You can see this trend, slight upward trend, but still somewhat flat over the last 5 years. But still, this company brings in huge amounts of net income each and every year. Taking a look at their balance sheet, they have one of the strongest balance sheets in the world. You can see here they have total current assets of $140 billion with total cash of $93 billion on hand. absolutely incredible. They're currently holding $93 billion of cash, which allows them to grow the business, spend money on research and development, as well as it gives them a lot of room to actually acquire other businesses that they believe will help grow the overall Apple brand. Taking a look at their total current liabilities of around $95 billion, much more total current assets compared to total current liabilities, current ratio of around 1.5, they can handle their total current assets with very ease over the next couple months. Taking a look at a long-term perspective, total amount of assets at $317 billion. This is a little bit of a decline for Apple. You can see here a little bit of a downward trend with regard to total assets, which is not good to see, but this company continues to perform very nicely, even though their assets are somewhat declining. Compared to total liabilities of $245 million. They do have a lot of long-term debt on this company, so Apple does a great job of, postponing their debt payments. They want to use the cash now to research and develop, and they understand money will be cheaper later on because of inflation. So Apple still should try to work down that long-term debt if they can, but very interesting to see that they are holding that much when this is a company that brings in a huge amount of cash each and every year. If we take a look at their equity, what we want from companies is growing equity year over year, and Apple doesn't really have that. They are on a decline, which is another, not the best thing to see, but with this company, I am not too worried about it. I do believe they can recover, grow equity over the long term, reduce their liabilities because they are bringing in such a huge amount of cash each and every year. So overall, that was a quick analysis on Apple. We went through their recent news headlines, talked about their current financial statements, and went over what analysts are expecting for the company. Personally, I believe Apple will be more valuable 5 years from now compared to where it is today. So for me, I like the company where it is today. They are doing a stock split coming very soon. So even though the share price will decline, I think that will be very attractive to young investors. Of course, the young investors aren't carrying the billions and $trillions worth of money that actually move a share price of a massive company like this. But overall, I just think it might bring more attention to Apple. It is already the largest company in the S&P and within the United States, but I just think the stock split will just bring more news around them because more individual investors will be talking about the company. But overall, that's how I think about companies. I think about how safe is the dividend? Are they consistently growing the dividend? How is their share price performing? What do we expect for the company moving forward? And does the company have a lot of growth potential and ways to generate future revenue growth? And Apple has that. Their wearables and their services have been growing at a fast rate. Although their iPhones may be slowing down, the other aspects of their business are growing rapidly that can actually overcome that decline and really boost company sales. So I think Apple has a lot of growth potential moving forward. Even though it is valued at $2 trillion today, if you plan on holding this company for the long term, I believe you will make some nice money, only because I have a strong belief personally that Apple will be worth more in 10 years than where it is today. So thank you for tuning in, everyone. That was a quick analysis on Apple stock. Just crossed that $2 trillion valuation. Thank you for watching. I'll see you in tomorrow's video.